Hey, good afternoon, everyone. This is Mark from Right Line Trading, and I'm just making this real quick video as a follow-up to the Sunday night webinar that I did on the Lear oscillator. And I just wanted to review some of the fundamentals of some oscillator fundamentals, and explain to you exactly what an oscillator does, and show you the difference between different oscillators and why the Lear is such a superior tool as far as trading is concerned. Now, the oscillator itself, every oscillator really has essentially variations of the following formula. Now, they produce a percent K line, which is this gold line. Now, the percent K line is an assessment of momentum. And what the formula does is comparing, this is the C is the close with the low, and the high with the low. So, in a long move, as the close approaches the high, the line continues to move up. Momentum is pushing price higher, and the close is approaching the high. And it's easy to demonstrate right here. If this is the high of the candle, and the close of the candle is close to the high, then you know yet you have a lot of momentum. As the close starts to retreat off the high, then momentum is starting to wane. And that's all these formulas do, is compare the relationship between the close of the candle to the high of the candle, or the close of the candle to the low of the candle. And this is the key line. This is just plain stochastic. Now, the way you use stochastic is like this. This is the 80 line, and this is the 20 line. And what you want to do is take a signal. You have to have two parameters met for there to be an entry. You have to have the stochastic line cross the signal line, but it's got to be below the 80 line. So in other words, right here, you get a short signal. The gold line or yellow line is crossing below the green line, which is the signal line, and it's happening right through the 80 line. And if you look above, you see you would get a signal to go short right here. Now here the cross takes place and the market is still overbought. So you would get a signal, but this would not be tradable. There's nothing to trade here. Nothing to trade here. Now here would be a long signal right here. Coming up from oversold, cross over the signal line, and you get a long signal right here. And you do get a long move. Now, if you just look at the crosses of the stochastic line with the signal line, you'll see that the confirmation comes very late here. If you look right here, it really doesn't print and confirm till right here. So this is it. The stochastic itself, in open source code, is very crude and is going to get you into a trade late and is also going to get you into a lot of false moves. I'm going to remove all the drawing tools. So although it's making a nice assessment of momentum, as far as getting you into a trade, it's not going to do it with a significant amount of precision. It's going to pull you into losers. So you have to be very careful using stochastic. It's a very simple formula. Now, what's very commonly used instead of stochastic, and we're going to compare them, is RSI, which is relative strength. And that is also an oscillator. It is simply a slightly different formula comparing the close to the high or the close to the low. And you can see what you're going to look for again is a cross of the signal line, of the oscillator line, with the signal line. Now in this case, if you look at RSI, the RSI line is the green line. So we're going to look for a cross right here and get an entry. Right here and get an entry. Right here you're going to get an entry. Now, here's the problem with RSI. It's very difficult to take these trades if the crossover does not occur in the overbought or oversold zone. In here, this is sort of the area where you don't want to trade. I mean, the point of using an oscillator is to take a short trade when the market's overbought and then collapses, or a long trade when the market's oversold and then rockets up. When it's in this intermediate zone here, just like here, this is where you really can't be sure that the trade's going to work. Now remember, these indicators have no forward-looking ability. And all they're doing is comparing the high with the close and the low with the close. So the only really nice signal you get here on this indicator is where the market goes overbought here, and then you get a cross right here to give you a short trade, and it occurs here, and you'll notice that the trade goes nowhere. And you just never get to overbought here. Never happens. So taking this cross is dangerous. Now it happens simply because price moves down. And what you have to understand, and I hope I'm not confusing you, is that this is simply tracking price. It is not telling you where price is going to move out into the future. In other words, they don't have any predictive ability as to where price is going to go. And the only trades that you can take, like right here, the market is oversold. And you're looking for the cross, which takes place right here. And the trade goes nowhere. On this move down, this market is not overbought. Now, I'm not going to even go into trading stochastic divergence. And there's no divergence here. Here's a lower high, Here, this is a lower high. Stochastic creates a lower high. So there's no divergence here. So again, I hope this is not confusing. So let's just review briefly what I've gone over. What you do, and we're not going to talk about divergent signals, because divergent signals have been around for 20 years and they continually fail. So I'm not going to look for them because that's really not what I want to describe for you. What I want to describe for you, and remember, and that a divergent signal is creating a counter trend trade. What we want to do is trade in the direction of momentum, not in the counter trend direction. We want to trade in the direction of the trend. So what we're doing is we're looking for a signal that takes place here where the market's overbought. And I'm going to create this here. That's your overbought zone. Here is your oversold zone. Right here. Can't get it to come over. Here we go. And you're looking for that gold cross, which is the oscillator signal or the %K line of the signal line right here in that position. Right here, it does give you a nice trade. Long trade. Right here. Comes up. Gives you a nice trade. RSI, or relative strength, gives you nothing. Over here, again, RSI, ineffective, stochastic, gets you in right about here. And you can see here's where the market's locked down, telling you that the bears are firmly in control. Now you can see on this short move, you have no trade because the market didn't get overbought. So this cross here to take the short move here is just a no-go. So I hope that's really clear. We're looking for a cross down short in the overbought area, and we're looking for a cross of the oscillator line with the signal line up in the oversold area. And we're doing the same thing with RSI. Now, a lot of traders rely heavily on RSI, and I have found it to be extraordinarily unhelpful. It never gets to overbought or oversold. Now, these are standard RSI inputs. Now let's take a look at the Laguerre, or the Modified Laguerre RSI indicator, compared to RSI, and compared standard RSI, and compared to stochastic. You're going to see how in what an outstanding way it just really outperforms them. Now let's remove all the drawings and take a look at the signal. Now right here, now I removed the arrows just for simplicity, but you're going to get an arrow here. You go from oversold and you cross over, and you're going to get a long signal here. Now, if you look at stochastic, no signal. You look at RSI, no signal. Nothing. You look at the modified Laguerre, superlative signal. And then let's see what happens. The Laguerre locks long right here to tell you that the bulls are firmly in control of the market. So if you don't take the arrow or the cross right here, all you need is a pullback and you've got the long trade. Look at stochastic right here. When we're green and locked on the Laguerre, stochastic gives us nothing. Relative strength gives us nothing. And our modified Laguerre tells us everything. And we can look at, let's take a look at another move. Let's look at a big move. This is the kind of move that you want to get. Now, first, let's take a look at the entry signal we would get off of stochastic. Now, stochastic, hold on, let me switch to a different entry. Here's a good one. Now, this is a trade right out of consolidation. Price comes up, consolidates, and then continues up. It's a great trade. Consolidation almost always breaks to the upside. And let's take a look at the three oscillators and see what they show us. Now, consolidation is tough for an oscillator to deal with. Now, relative strength, so stochastic never gets into this oversold zone. So we have no trade. RSI never gives us an entry. It's just stuck right in the middle. Now you can trade the crossover in this intermediate zone, but it's going to be very risky when you're on the right edge of the chart. Now watch what happens with the Laguerre. Now with the Laguerre, you also don't get into that oversold area, but you get a locked green line right here telling you that the bulls are firmly in control. Now, even though you lose it transiently here, you've got your entry here, and there's no reason to exit the trade. Because just a couple of candles later, it kicks right back in and up you go. This is a very tough trade for an oscillator to handle as a solo entry tool. And the only thing that can do it right is the modified Laguerre. And let's look at one more entry. Let's take a look at this move. This is a nice move. And we're going to get right here. Let's take a look at the stochastic. Now the stochastic is going to move up, and you're can't. You're going to take that trade. The entry is going to be right here. It's a good entry. Relative strength, zilch. You get exactly the same entry with the Laguerre. To move it over right here. But then you get additional confirmation of the lock long right here. Now in this case, actually the stochastic locks long too. But you'll notice it doesn't give you quite the confirmation that the Laguerre does. So you're in and up you go. I'm gonna do one more. Let's take a short trade, okay? And just looking for a, let's take this short trade right here. Here's a good one. Right here. Now, RSI actually gets you into this trade. It just touches 80. And you get a cross. I'm sorry, yeah, you get across right here. You get a perfect entry signal right here. And then here's the problem with RSI. RSI is going to take you out because the RSI line crosses the signal line on these 3 candles up and then does not let you get back into the trade to the downside, because this cross back down does not occur in overbought or oversold territory. So it's going to give you the entry and then it's going to shake you out. Now stochastic does a better job. It gets you in also here, right here. Oops. And it takes you down to oversold territory, but it crosses back up to give you a long signal right here. And that's something you don't want. That's going to give you a loser. And then on the cross back down, it doesn't come from overbought down, and you can't get back into this trade. I hope that's clear. It signals you long, and then it doesn't signal you back short. Now let's take a look at the Laguerre. Now the Laguerre is going to signal you short right here. It's going to actually get you in a couple of candles late. But then, look what happens. It locks short right here. It almost budges, but it doesn't do it. It does not get shaken out in chop because of the filters and the modifications we made in the formula. So you go short 2 candles later, but then if you program this into your automatic trade management strategy, this move up is not going to take you out, because this red line never leaves. It stays red. Right through here. You don't need a re-entry signal because you should have never left the trade. You should have gone short here and taken it all the way down, as long as the Laguerre line is locked short. And you can see it's locked short all the way through here. It stays below the 20 line. You get that lock. So of the modified Laguerre, with its precision and stability, gets you in a trade, usually earlier, but then it keeps you in the trade. Relative strength and stochastic do a really poor job. They're going to get you into some trades, you're going to get shaken out. So of all the oscillators, this is by far the most powerful. This Laguerre line is an amazing tool to keep you in a trade. All the other oscillators told you to get out. This line kept you in because of the stability of our Laguerre line in the way we've changed the formula and changed the filters. So it's just a superlative trade entry tool. You can use it as a standalone, as an augmentation to anything that you're currently using on your platform. Now, I hope that you've also gotten a little bit of a better understanding of how to trade an oscillator. A short trade from overbought, a long trade from oversold, and you want to make sure that the important line crosses the signal line. Now, we've removed the signal line from the Laguerre too. It's really unimportant. It's a very, very different formula, although it's based on the same principles as all the other oscillators are. It's a far more complex formula, and it doesn't require a signal line. The only thing that's important is the Laguerre line cross of the 80 line and the 20 line, and it does it with incredible precision. You're gonna get an arrow. You saw them at the webinar. Short right here. You can take it, and then you can stay in this whole trade short. The Laguerre line keeps you in. Everything else shakes you out. So I hope that this is just a little bit of additional information that helps you understand the power of this indicator. Now we are going to make it a multi-time frame assessment in the very near future. In fact, I think we have it done now. If you have the indicator, you're going to get that upgrade to its ability to not only make an assessment of price on your trading chart, but also on 2 higher time frames. That's going to give it tremendous power, forward-looking power, and make it almost a system in and of itself that you can trade. So listen, everyone, have a great afternoon, and I hope you found this helpful.